Hello, and welcome to the Atlantic Debrief, the Atlantic Council Europe Center's podcast and web series, where we unpack the most pressing issues impacting transatlantic relations today. My name is Rachel Rizzo, and I'm a non-resident senior fellow with the Atlantic Council's Europe Center. It's a fitting topic that for the final debrief of the year, we're going to talk about what policymakers and officials on both sides of the Atlantic have been talking about more and more over the last few years: China. We've seen an increase in tensions here in Washington with China, but across the Atlantic as well. There's a growing concern for the sway China has on the global economy, especially as Europe realizes their strategic dependencies on things like critical minerals and the role China will play in the green transition. Joining us today to unpack China's economic trends and how they impact Europe and the United States is Niels Graham, an associate director with the Atlantic Council's GeoEconomics Center, who focuses on, among other things, China's economy. Niels, thanks so much for being with us today.
Thanks, Rachel. Over at the GeoEcon Center, we've been focused on China for the last 3 or so years, so happy to dive into it with you today.
Absolutely. You guys have been ahead of the curve over there. So it's a great way to end the year, a great conversation to have, and I'm looking forward to it. So let's dive right in. You recently did some digging and painted a really compelling picture of China's manufacturing trends and their implications for the global green goods trade. Can you tell us about your research and the biggest takeaways you have from this report that you just wrote?
Yeah, so the Chinese economy over the past 3 or so years has gone through a really major structural transition. Over the past decade or so, the property sector has really driven the Chinese economy. By some estimates, at its peak, contributed to about a quarter of Chinese growth overall. But as we've been seeing in recent years, this has really begun to wind down. During COVID, we heard about the collapse of Evergrande. More recently, the issues around Country Garden. These are kind of major Chinese property developers. And China's looking for new engines of growth. What it's found is really manufacturing. This is what we're seeing right now as Chinese banks really ramp up lending to its manufacturing sector. And this is leading to fears of overcapacity. Chinese manufacturing, even before COVID, even before this lending spike was happening, was already running into capacity issues. And this combined with saturated domestic consumers or consumers who aren't buying more within China have forced these manufacturers to look abroad, particularly to the EU, to export a lot of their goods. And this is, I think, the primary concern that's really on EU policymakers' minds right now.
So are you saying that the Chinese economy is actually not doing that great and they need export markets in order to prop themselves up?
Exactly. Coming out of COVID, really everyone thought China would rebound in a similar way to maybe the US economy did as we exited our COVID economic controls. This has really not come to fruition, in part because of the property sector, but there are other issues as well at play around Chinese consumers really not buying the goods there. So China has been forced now to look abroad, and they're really looking now to send these goods to places like the US, places like the EU.
Interesting. Okay, so you write specifically about Europe's past experience with Chinese manufacturing, where, for example, China cornered the market on solar cell production. Can the EU learn anything from its past experiences as China looks to the EU as an export market to help prop up its own economy? How do you see Europe sort of handling this shift?
Exactly. This is not a new trend. This happened about a decade earlier with kind of solar exports. So maybe taking a step back in 2008, the EU comprised about 30% of global solar manufacturing. However, a combination of the global financial crisis and then similar subsidies that Chinese kind of government provided to its industry really allowed the Chinese manufacturers to run away with this. Now China contributes over around 75% of global solar manufacturing compared to around 30% of global solar demand. So this is kind of the problem that we're looking to avoid. And this is, again, the dynamic that we're now seeing play out within the EV space. So in the past 3 years, Chinese exports of EVs have shot up around 1,500%. This is primarily now going to the EU market. Around 40% of these exports are making their way into the EU's market. And this is really putting concerns for EU manufacturers in particular. They're also betting that EVs will be their next sort of transition. A lot of German car makers in particular are looking to transition into EVs, and low-cost Chinese EVs are really threatening that. So the Commission now has a sort of issue where it has to either defend its own industry and allow these Chinese imports to come in. So what we've seen in this fall is a launch of a anti-subsidy probe, and this is really the European Commission looking into Chinese industry, looking into the support that the Chinese government has provided the industry to see whether or not it can put in tariffs, put in other sort of trade controls that would allow its own domestic manufacturers to get a little bit more of that competitive back.
Is this sort of the conversation that Ursula von der Leyen had in Beijing just, I think, last week? Basically, can we convince China to stop, dumping cheap exports onto the European market? And if not, then the EU is going to have to take action. Do you really see that happening? Do you really see the EU able to sort of come together and push back on this? Or, you said in your paper that the window for action for the EU is closing. Like, I'm just sort of curious as to what that means, if you actually sort of can see the EU taking steps on this.
No, exactly. No, this was a key focus at the recent EU-China summit that happened, but really it seemed like it was unresolved. The EU presented its case, the Chinese side listened, but really did not seem to want to shift its policy overall. So it really comes down to this probe, whether or not the EU is going to find that Chinese officials or Beijing overall has supported its industry in unfair ways and then put in sort of tariffs to, again, increase Chinese competitiveness. But this is not really only playing out in the EV space. The European Commission is looking at a range of different industries. So wind turbines is another example that Commission officials have spoken to as a possible area for this probe. But we're seeing this Chinese manufacturing surge happen across the board. So electrolyzers, heat pumps, a range of other goods critical for the green transition are also gaining the support, and there are also these overcapacity issues. So we also do see a short sort of timeline. This probe is meant to go for about 1 year. Chinese exports could balloon in this. As I mentioned earlier, it's already gone up about 1,500%. China's continuing to build new factories, continuing to send these goods abroad. So, and its own market is oversaturated. So by the time the Commission acts, there's a chance that China would have already sort of taken on dominant market share as it already has with solar panels.
Okay. So speaking of solar panels, speaking of the green transition, generally, the economic and ecologic impetus for the green transition seems to run directly into the problem of China as the dominant producer of the materials needed to move the green transition into the next 10, 15, or 20 years. They control a lot of the processing and refining for global critical raw minerals. They've built partnerships overseas, I think, in a more efficient way than the EU and the US has. So where do you see this trend going? Do you think China is going to continue to dominate the green manufacturing market on things like EVs, wind turbines, heat pumps, and similar items?
I think you're exactly right to point this out. I think this is the core tension at the heart of the US and the EU's green transition. Do they want a cost-effective green transition really built on the back of Chinese subsidies? China's able to produce these goods at a lower price point than Western manufacturers, and the green transition is going to be incredibly expensive. So these are cost-effective goods. Or do they want a green transition built on the backs of sort of US or EU manufacturers and US and EU workers? The US seems to have picked the latter. We've continued to protect our market. We've pumped massive amounts of money through the Inflation Reduction Act into rebuilding American manufacturing across a range of different goods, from solar to wind to green hydrogen as well. The EU in some ways seems to be following our footsteps with things like the Green Deal. However, the EU has not put the same scale of money, nor has it protected its own market in the same way as the US has. So the EU really has to grapple this question, I think, a little bit more deeply than the United States, who's already sort of picked it. On one hand, again, we have China subsidizing the green transition in many ways for the EU and for EU consumers overall. However, the EU has also made clear that it really wants to use the green transition in the same way the US has to rebuild a lot of EU manufacturing. So it really wants to reshore all these wind production, reshore some of the solar production. I think one really telling quote is they don't want to transition away from reliance on Russian natural gas as a sort of previous energy source to now reliant on sort of Chinese green transition products. So it really is, again, a core tension that the EU continues to have to grapple with.
And is there tension within the EU as well from different members, just given the fact that, there's 27 members of the EU and they all sort of have different relationships with China? I was actually just speaking last night at an event here in Salt Lake City at the Foreign Relations Committee. And I was talking a little bit about China and its relationship with Europe. And basically I was saying that there was this moment last year where Chinese state councilor Wang Yi went to Hungary and basically said Hungary is consistently on our list of highest trade dollars when it
Mhm.
comes to global partners. And the total is something like over $10 billion a year. And that's just for Hungary. So do you sort of see the EU able to like come to a joint vision for how it should approach this, or is there going to be continued tension there going forward?
No, I think this is going to be an area of continued tension. I think China is
Yeah.
very astute to play on this tension. We also haven't really talked much about the possible Chinese response. If the EU's probe does find that Chinese companies are in violation and does put on subsidies, China's not going to take this lying down. They're likely going to pursue a similar path to what they did with solars. The solar panel probe came back and they suggested a 47% tariff. The EU seemed like it was going to pursue this, and then China threatened a trade war with the EU, and the EU ultimately backed down. So I think a similar dynamic will play out here, where if we do find China in violation and the EU does move to put in tariffs, China is going to kind of respond in kind. They may target very specific industries. For example, German auto manufacturers continue to export large amounts of luxury automobiles to the EU. This could come under play, or they could play on these sort of tensions within the EU as well and try to focus on really specific countries, really specific goods to further divide the Commission and further make it hard to find unity within the EU to respond to this kind of rising Chinese export.
Absolutely. So, what else? Just to for a closing question, as you look ahead in 2024, you're obviously looking at how the EU is preparing for this, how China
Mhm.
might prepare a response. What else is on your research map? What's interesting to you? What are you going to be focusing on?
Sure. So I think in terms of an EU response, I think one thing that we haven't talked much about yet is the carbon border adjustment mechanism. This has begun to come into play. They've begun to collect data on it. And with this data, they'll start to adjust the different costs that they'll associate with different products coming into the EU market. So in addition to the probe, this is another way that the EU could make Chinese goods a little bit more expensive, make sure its own manufacturers are a little bit more cost effective. But again, this won't come into effect until 2026. So we have about two-ish full years of possible just free reign of Chinese exports into the EU market to deal with until then. That said, there's also, I think, a shift in the EU. It hasn't moved as far as the US in terms of responding to Chinese trade practices, but it's certainly in a very different place than it was back in 2012, both politically, in the sense of understanding that China is more and more of a rising security threat, trade threat, and so forth, and more willingness on their end to respond. And then on top of this, the Chinese domestic economic system is very, very different than where it was in 2012. In 2012, China was at its peak of manufacturing growth, peak of economic strength. It was willing to threaten things like a trade war with the EU and willing to kind of take that risk on. I'm not sure it's in the same place right now. Both the EU and China, I think, don't want a trade war, but I think there's a lot more latitude to negotiate, a lot more latitude to figure out ways to diplomatically possibly reduce kind of Chinese exports to the EU overall. So I think this continued engagement by the European Commission, maybe the recent EU-China summit didn't work out, but in the future, I think there's a lot more space for negotiation to ensure that both sides can find a way that the EU can continue, or sorry, China can continue to export some goods to the EU, but maybe the EU can continue to protect really key critical goods that it wants to produce within its own borders.
Absolutely. So, ending on sort of a positive note, thank you so much for joining us today. This is a great conversation to close out the 2023 Atlantic Debrief series. We'll look forward to launching it again at the beginning of January 2024. And hopefully, we can have another one of these conversations and see where this topic
Okay.
has gone over the next year. So, I hope you have a great rest of the year. And thanks so much for joining us today.
You as well. Thank you for having me on.
Absolutely. Thanks, Niels.